The world watched in astonishment as President Trump unleashed a barrage of tariffs. These were not targeted measures, they were sweeping and severe. A 10% tariff was slapped on all imports. Targeted duties hit dozens of countries even harder. This was a declaration of economic war. The impact was immediate and dramatic. The tariffs were met with disbelief and anger. Many saw them as reckless and irresponsible. Economists warned of a trade war. They predicted dire consequences for the global economy. Financial markets went into a tailspin. The Dow Jones plunged. The S&P 500 followed suit. President Trump remained defiant. He insisted the tariffs were necessary. He claimed they would protect American jobs. He argued that other countries had been taking advantage of the United States for too long. He vowed to put America first, no matter the cost. The tariffs sent shockwaves through the global economy. The International Monetary Fund issued a stark warning. The organization, a pillar of global financial stability, predicted a significant risk to global growth. The IMF was particularly concerned about the impact on investment and consumer confidence. Financial institutions echoed these concerns. J.P. Morgan, a bellwether for the financial industry, raised its recession probability forecast. The bank now saw a 60% chance of a global recession within the next year. The tariffs had injected a dangerous level of uncertainty into the global economy. Markets reacted swiftly and negatively. Tokyo's stock market, a barometer of Asian economic health, braced for its worst week in years. Banking shares were particularly hard hit. Investors fled to safe haven assets like gold and government bonds. Adding to the uncertainty were conflicting messages from the White House. Some officials insisted the tariffs were not a negotiating tactic. They claimed the tariffs were a permanent fixture. They were designed to protect American interests, regardless of the response from other countries. However, President Trump contradicted his own administration. He publicly stated the tariffs were leverage. They were a tool to bring other countries to the negotiating table. He believed that the threat of further tariffs would force concessions. This inconsistency fueled confusion and anxiety in global markets. The president's pronouncements did little to calm the waters. He seemed to relish the role of disruptor. He believed that his unpredictable style gave him an advantage in negotiations. However, many world leaders saw it as reckless and dangerous. International condemnation was swift and severe. Leaders from across the globe denounced the tariffs. They warned of retaliation. The prospect of a trade war loomed large. The post-World War II consensus on free trade was teetering on the brink. Key trading partners were among the most vocal critics. Japanese Prime Minister Shigeru Ishiba declared a national crisis. He vowed to protect Japanese industries and workers. Canadian Prime Minister Justin Trudeau expressed deep disappointment with the United States. He announced retaliatory tariffs on a range of American goods. China, the primary target of the tariffs, promised a measured but firm response. The Chinese government denounced the tariffs as protectionist and unilateral. Beijing vowed to defend its interests through a combination of tariffs and other measures. The European Union, a bloc of 27 countries, warned of a spiral of retaliation. French President Emmanuel Macron called for suspending U.S. investment in Europe. The EU prepared to impose tariffs on a range of American products, from motorcycles to bourbon. Section 5. Business in the crosshairs. The tariffs had an immediate impact on businesses around the world. Companies with global supply chains were particularly vulnerable. The tariffs disrupted established trade flows. They forced businesses to rethink their operations. Stellantis, a multinational automaker, announced temporary layoffs and plant closures in Canada and Mexico. The company cited the tariffs as a key factor in its decision. General Motors, on the other hand, announced plans to increase production in the United States. The company seemed to be betting that the tariffs would lead to increased demand for American-made cars. The tariffs created winners and losers. Some domestic industries benefited from the protection afforded by the tariffs. However, many more businesses were hurt by the increased costs and uncertainty. Section 6. The price consumers pay. Ultimately, it was consumers who bore the brunt of the tariffs. The tariffs led to higher prices on a wide range of goods, from cars to washing machines. The cost of living increased for ordinary Americans. The technology sector was particularly hard hit. The tariffs on Chinese imports drove up the cost of components used in smartphones, computers, and other electronics. Analysts predicted that a high-end iPhone could cost nearly $2,300 if Apple passed on the full cost of the tariffs to consumers. The tariffs acted as a regressive tax. They disproportionately impacted lower-income households. These households spent a larger share of their income on consumer goods. The tariffs eroded their purchasing power and reduced their standard of living. Section 7. A century of trade upended. The tariffs represented a dramatic departure from decades of American trade policy. The United States had long been a champion of free trade. It had worked to lower trade barriers around the world. The tariffs reversed this trend. The tariffs were the highest in over a century. They harkened back to a bygone era of protectionism. This was an era of beggar-thy-neighbor policies. Countries sought to protect their own industries at the expense of others. This approach led to economic stagnation and, ultimately, to war. The tariffs threatened to unravel the rules-based trading system that had underpinned global prosperity for decades. This system was based on the principles of openness, transparency, and non-discrimination. The tariffs undermined these principles. Section 8. The Specter of Protectionism. The tariffs raised the specter of protectionism around the world. Other countries felt pressure to retaliate. They feared losing market share. They worried about the impact on their own economies. A domino effect of protectionist measures seemed all too possible. The tariffs undermined the principles of free trade. Free trade had lifted millions of people out of poverty. It had driven innovation and economic growth. The tariffs threatened to reverse this progress. The tariffs were a symptom of a broader trend. Globalization was under attack. Populism was on the rise. There was a growing backlash against free trade and open markets. The tariffs were a dangerous manifestation of this backlash. Section 9. A World on Edge. The world watched anxiously as the trade war escalated. The tariffs had created a climate of uncertainty and fear. Businesses were reluctant to invest. Consumers cut back on spending. The global economy teetered on the brink. The tariffs were a dangerous gamble. They were a bet that the United States could bully its way to a better deal. However, this gamble had the potential to backfire spectacularly. It could lead to a global recession. It could damage the fabric of the global economy. The tariffs were a stark reminder of the interconnectedness of the global economy. In a world of global supply chains and integrated markets, there were no winners in a trade war. Everyone stood to lose.